The first thing when it comes to building relationships is making sure that everybody knows who you are and what it is that you do. Everyone is an asset if you're using them properly. So the more people you speak to, it could be the janitor and it could be the executive. You know, everybody knows somebody, and as long as they know what you're doing and you're very specific about what you need from them.
Hi, everybody. This is Jose Luis Morales. Welcome back to the Morales Group Show. This is episode number 85. Today, we've got a very special guest. His name is Jude Bernard. He's been featured in Bigger Pockets before. He's a real estate investor out of New York, Manhattan, and Brooklyn. And today, he's going to be sharing with us his story on how he went from buying his very first property to have personally transacted in over $100 million worth of real estate transactions. Welcome to the show, Jude. How are you?
I'm doing great. Thank you so much for having me. I appreciate it.
Of course, man. We're really appreciative. Before we get into the show, I just want to remind our viewers, if you have seen value in some of our other interviews, make sure to hit that subscribe button. If you've got any friends, family, neighbors that might find value in this interview, make sure to share that button. So let's start off, Jude, just by telling us who is Jude Bernard and how did you happen to stumble upon the real estate industry?
Jude Bernard is a real estate investor, real estate broker, general contractor, landlord, real estate consultant, philanthropist, son, nephew, former marathoner, just an overall regular guy that does a little something with real estate. I've been involved in the real estate game for actually yesterday made 24 years exactly since the day I purchased my very first property. I purchased my first property October 31st, 1997. It was a 3-family in South Jamaica, Queens. And I was able to pick up that property through an FHA loan. I picked up that property through an FHA loan. I had secured financing in part by using some of my student loans. I was in grad school at the time. Yeah, I picked up that property, 3% down, and just to get my feet wet. My first mission was to just trying to get $500 a month in positive cash flow, and that was the extent of what I saw real estate as. I did not plan on becoming an investor and buying property after property after property and flipping and doing all the silly things that we get into. But once I had a taste of it, I quickly learned to love it.
What were some of the challenges that you faced buying your first property? Was there like anything mentally that you had to overcome to kind of jump in? Or was it something that you kind of just said, hey, look, this is a good deal, let's jump in? Because I know a lot of people struggle with getting into their first deal. One
of the biggest things that I had to deal with was the fear and the loom of knowing that you had that mortgage, because there's always what if the tenants don't pay, or what if something breaks and stuff like that. But just like anything else in life that is important to you, you figure it out. You work it out. You figure it out. There's always going to be a challenge, and you just have to be willing to, put your head into figuring out what will you do in the event that there is a challenge, because there's always a solution out there. It's whether you are going to take the time to figure it out or not. One of my personal challenges when I first acquired my first property was I was under the misconception that all I had to do was provide housing and they would just pay me. I didn't know anything about maintenance. I didn't know about managing tenants. I didn't know about the relationships. I didn't know about the contractors. I didn't know about the city agencies and things like that. It was just, here's how much they're going to pay me. Here's how much a mortgage is. And the difference is mine. So I was very ignorant, which led to me mismanaging that property severely. And it took some time before I got my stride and truly understood the importance of being prepared for whatever that you're going into.
And then how long did it take before you actually purchased your second deal? Did you take a break from the first deal to the second deal, or was it something like you tasted blood and it was like, man, I like this?
Well, funny enough, it was an attached house. So it was 13816 90th Avenue, and right next door there was 13818 90th Avenue that came on the market. Coincidentally, it came in right as I was getting my income tax check that very first income tax return, like when like when you first buy a house and you're not used to getting those big returns back from all the interest payments that you made from the year before. So I had some cash available, and plus I was working and I was still living at my mom's place. Plus I was getting that positive cash flow. So I was able to put 20% down on the place next door, even though I had to only put 3% down on this one. It was after that I tasted the blood.
That's funny. And then, like, I know that you said positive cash flow. Like, how did you have the wherewithal to like see, like, okay, I want to buy properties that produce rental cash flow? Because for me, I played a game with my broker, and it was called Rat Race by Robert Kiyosaki. And he basically took me to his house and introduced me to that game. And basically the whole point of it was to have your positive monthly residual exceed your liabilities every single month. And to me, a huge light bulb came on. What about for you? Was there something that kind of clicked? Did you have a mentor?
Unfortunately, I didn't have a mentor, so I had to basically make every mistake on my own and learn. And actually, I went into this game not looking to have positive cash flow where my expenses were lower than my income, but I came in with the wrong mindset where I was trying to increase my expenses because I was fairly young at the time. So I wanted to increase my expenses. I wanted to hang out more. I wanted a nice car. I wanted nice clothes. I wanted to go to the bar and spend a lot of money on bottles and stuff like that. So I was not able to do that on my salary. So I kind of did it backwards. Like the mindset wasn't there, because in reality, the best way to do it is to maintain the same lifestyle as your revenue increases. I did it the wrong way. I was increasing my expenses even before the income came in, and it was good for a short period of time, but just like anything else, whenever the foundation is weak, it just takes a little bit of movement in the ground for everything to come tumbling down.
What would you say was one of the most difficult times in your real estate career, like investing in real estate? Was there ever a time where maybe tenants didn't pay, or maybe the marketplace was in the middle of a correction, or maybe just having too high expenses at some point? What are some of the challenges?
How long have you been in the game?
So this is my 11th year, and I've been buying a property since 2011, 2012, basically, just like one or multiple a year.
So I guess you heard about, all you did was hear about it in 2008 and 2009. You came in right after things kind of hit the bottom, and you've been riding it all the way up. But unfortunately, I got in in 97. And I rode it up, and it all came crashing down in 2006, between 2006 and 2008. And it was a very difficult time for me because I was over leveraged, and I did not know what I was doing at the time, because similar to everybody else in the real estate market, not everybody else, similar to a lot of people in the real estate market, it was purely speculative. Everybody was under the assumption that everything will just continually to rise. And I was buying these properties with 100% financing, 105% financing, going to closing, then walking out of closing with a check and keys. During that period when it all fell, and the banks and the tenants weren't paying, and you heard the stories, you know what happened.
I feel almost blessed that I like, because when I got into the business, I saw everybody around me, and I saw how, not traumatized, but I saw everything. They were telling me the stories of what they went through. It was a big lesson for me, even though I didn't experience it, but I got to see everybody else around me witness that. So as I grew my portfolio, it became a lesson to me, like, okay, I don't ever want to be in this position. What lessons would you say, or what adjustments did you make in your business, like moving forward from that?
I actually created a model that I live by. Like I only buy properties that are 25% below ARV.
I love it.
I make sure that I always have a certain amount of cash available. I only buy in certain areas, as opposed to in 2008 when it was a wild, wild west. It's just like, yeah, I'll take that one. I'll take that one, and that one over there too. You have to be intentional in what you do. And that's one of the lessons that I learned, to be more intentional, more definitive about the things that I want, what I don't want. and have a clear plan. If you fail to plan to fail.
Yeah. Exactly. Now, was that something that just a light bulb came on for you, or did you get involved in like certain organizations, like maybe like mentorship at some point, or was that just something that like you started getting clear as a result of being forced to get more clear on it?
Yeah, I was forced. To this day, I still have not gotten a mentor. I've been trying to find someone. It's difficult, like when I've been doing it for so long, to find someone that could help elevate me, that's, not necessarily a peer, but someone who could actually teach me different perspectives and stuff like that. So, but I have a lot of mentors online, I watch a lot of people on YouTube and I learn from them, and every day I'm watching them. A lot of my mentors are authors of books that I read.
Okay.
So
a big reader.
A lot of virtual mentorship.
Which a lot of people think that you have to have somebody that you talk to on the phone, but I mean, if you just read a book, that's virtually somebody mentoring you through a book as well.
Exactly. Even with social media right now, there's a lot of virtual mentors that you're just watching people and you're watching how they're moving and you're learning their mindset, and you're just kind of figuring them out.
When some people hear I buy a property 25% below market value, they might think to themselves like, how does he do that? Like, meaning like, okay, the property's worth 100. That means you're buying it at 75. Is that possible?
75 max.
Yeah, 75,000 max. And that includes repairs, I would imagine, as well, too, right? Yeah, so it's
exactly.
75 all in, basically.
Exactly. So that just means every deal is not for you, and it's harder to find. So especially in a market like New York City, where it's very competitive, and there are a lot of people out there looking for the same things that you are. But that's why there is the importance of building relationships. Because through those relationships, you'll get the phone calls before things get listed. Through those relationships, you'll know who's losing their house. Through those relationships, you'll speak to the contractors who are working on properties and they know that the owners can't pay. Through those relationships, you'll probably get first dibs at surrogates court, at Supreme Court, and all those other courts to know when things are happening.
So like, let's say I was starting off in the business, or I wanted to start off building relationships. Would I just start building relationships with contractors? Would I start building relationships with courts? What would you recommend in that situation?
Well, the first thing when it comes to building relationships is making sure that everybody knows who you are and what it is that you do. Right. And everyone is an asset if you're using them properly. So the more people you speak to, it could be the janitor and it could be the executive. Everybody knows somebody. And as long as they know what you're doing and you're very specific about what you need from them. And also, relationships are not a one-way street. They're a two-way street. So as long as you're constantly providing value to everyone that out there, deals will come. To somebody who's starting now, I would tell them find themselves maybe in a real estate office and build relationships, not with the big time brokers, but with the new agents who are hungry, because those new agents one day will be the big time brokers.
I agree. And they'll remember that. They'll remember when they were the small starting off, who was nice to them, who tried to build a relationship with them, who tried to help them out as they get larger. With the 25% below market value strategy, are you selling off most of these properties, or are you basically holding them as buy and hold rentals?
I typically, I have a formula that I use. What I'll do is I'll flip like maybe 2 out of every 3 of them. I'll use my flip money to pay down the one that I keep.
So it's basically for every 3 you sell 2 and keep 1, basically, which is a good formula. Exactly. Some people get caught just flipping, but they don't keep anything. Why not just sell all 3 versus keep one of them at least?
Especially in New York, there's always seller's remorse. There's nothing worse when you think that you were so smart and you sold a property for $1 million, and then a year later you see that property, you're back on the market for 2.5.
Yeah. At
the end of the day, I self-manage, so I'm unable to keep everything. Also, with the money that I make by flipping, I also use that money to do other things as well. So I'm in the stock market. I'm in small businesses. I run my nonprofit, so it's all part of a bigger formula for me.
So it basically helps. It's awesome that you say that seller's remorse, because I had that on several properties that I flipped. I remember flipping a property at 400, making 40,000 on it, then paying 50% in taxes. And then I was like, why did I do that? Why didn't I just keep it? That property would be worth double right now, almost, I'm sure that you get that as well.
Yeah, but it's a formula, and you always got to ask what's important to you, the time value of money.
Yeah.
What can you do with the money? If you got that money today, what can you do with it? Mm-hmm. Because if you flip that 40,000 and then you actually put that 40,000 in, let's say, Tesla stock, and like 2 years ago, and it's 10x since then, you wouldn't be mad at it.
No, true.
So you have to look at your overall financial goals. And I like to look at my whole financial picture as, in the macro level and not just, one piece at a time. So it's okay to take a step back on one aspect if it's going to help propel the next.
That's actually really good insight, because it all just depends what you did with it. Let me ask you this, as it relates to transacting in over $100 million in sales, have you ever lost money on a property or something that didn't? Have you ever lost money on a property?
I lose money all the time. I lose money all the time holding a property too long, have a comedy of errors that happen on a property. I ended up losing $250,000 on a property that I was looking to make $60,000 on. Mm-hmm. And this was before I had my own personal guidelines, and somebody presented an opportunity for me to buy a property, get the tenant out, and then flip it for a quick 60. And little did I know that the tenant was actually the old homeowner. I got caught in a case saying that it was home equity theft. So they gave him the property back, and then I had to fight and prove that I bought it, legally. And that took about 4 years before I had the deed transferred back to me. But in this time, I was out of my money. The guy trashed the house. I fixed the house. Then vandals came in and took over the house. After everything was said and done, I tried to make $60,000 in 3 or 4 months, and I ended up losing $250,000 in 4 years. So,
was there anything that you would have done differently that maybe would have prevented that at that point?
Yeah, I should have done a better risk versus reward analysis. Right now, I would never risk $700,000 in cash just to make $60,000. Whereas in the Wild Wild West days, it made sense at the time.
And then can you mind, do you have a formula? You seem like somebody that's got specific formulas now. Would you mind what your risk reward analysis formula looks like now versus then?
Right now on a flip, I want to make 40% cash on cash. Mm-hmm. On a rental, I want to make at least 16% cash on cash over the year.
So if it doesn't make 40% cash on cash, you're probably not interested. And if it doesn't make 16%, you're probably not interested in
probably not. But, there's always, external factors, proximity to another one of my properties, or if there's some, something that I know, some hidden value that might be out there that most people might not see.
A lot of people think that there's no good deals in their marketplace. Like being in California, Southern California, a lot of people say, well, there's no good deals in Southern California. Prices are too expensive. You're in a price point where properties are $700,000, $1 million, $2 million, $3 million. What do you say to people who say that I'm going to go buy in Columbus, Ohio because prices are $50,000 or $40,000 or $30,000?
Work harder. Take the microscope out and really try to scoop up these good deals, because there will always be opportunity out there. There are people who inherit properties every day that they don't want. There are people out there who are losing homes. There are people out there who just can't maintain the property that they have. There's always an opportunity to find a deal. If you're in someplace that's highly competitive or the numbers are higher, it just requires a little bit more work on your part to finance it. It requires a little work on your time to look for it. But they're still out there. Last week, I just went into contract for a property that I'm purchasing a 5,400 square foot property that I'm purchasing for $2 million. 3,500 square foot property on the same block just went for $2,750,000. So they're out there. You just have to, first of all, you have to have the stomach for it in these high market areas, because if things go wrong, they go really wrong. But it's anything else in life, you just have to put the work in.
What I tell people in my market is just look at the MLS or look at the tax records. You'll see that somebody bought a property 40% off market value, 25% off market value. You just have to look at the data. So what I did when I was trying to convince myself, I just went back in history and said, that was a good deal. That was a good deal. And typically I could find a handful to 10 properties that I'm like, man, I wish I would have been that buyer. Psychologically, I was like, there are good deals, because my philosophy is if you tell yourself that there's no good deals, you're not going to find any, because you're mentally not even in the game, versus there are good deals going out there.
I always like this story about like the 4-minute mile.
Mm-hmm. Yeah, I love it.
Before somebody wrote, like for years and years, everybody was trying to run a 4-minute mile, and everybody thought it was impossible. Once that first person ran a 4-minute mile, it seems just like every college kid, every high school kid is running a 4-minute mile.
Yeah. Once somebody did it, now it just became anybody could do it at that point.
So while you're looking at those MLSs and you're saying, hey, if this person did it, then I can do it as well.
Absolutely. What are your thoughts on other people's money? Like, meaning like when you're buying a lot of these properties?
I love it. I like to go into every deal, like with all debt. I give out equity to my investors only if they're like super savvy, and if that's like the final, if that's like the only outcome. But if the deal makes sense, and if I'm still making 40%, 40%, 35%, using all other people's money, why not? That's another thing about relationships. Like once you've built these solid relationships and you become proven to your investors that you can deliver, there's no reason why you should ever use your own money. Your money should be out there working for you as well. Your money should be out there doing risky stuff that you can't take other people's money to do. Like you could use your own money to invest in businesses and buy crypto, but you can't take somebody else's money to do that because it's just too risky. You take the chances with your money, and then you use other people's money for safe investments.
Would you mind kind of walking us through a deal where you were able to structure something creatively where it involved very little of your own money, and maybe you had to give equity to somebody, or you had to pay them a certain amount of monthly rent or monthly mortgage or something like that?
I rarely, I haven't given anybody equity in years,
Uh-huh.
And I'm in a process right now that I have to sell a property that I don't want to sell because somebody has equity. So that's always the last resort for me. But in this particular deal that I'm talking to you about, so far I've raised about $500,000. I've raised $500,000 on this $2 million acquisition. I've raised $500,000 for my private investors for the down payment and to start the construction, and I've secured 85% financing for the entire project. Mm-hmm. So as of right now, I'm probably have zero of my own money out there. What sucks about it is that I'm going to have to carry the monthly nut every month, which is going to be, 5 figures. But I use my portfolio, my portfolio rentals to cover that.
What about how does somebody go about building relationships with private money? Like, is that something that like these people just happen to fall on your lap, or is that something that you purposely found them somewhere and kind of built those relationships in that way?
Well, typically with private money, it's all relationship based. So it normally starts with a referral, mm-hmm. and then a very small loan at a very unfavorable term. And then once you've proven yourself, they kind of loosen the reins a little, give you a little bit more at better terms, and so forth like that. So it's something that happens over time. Like you're not going to get 6% no points your first time meeting somebody. It takes a little while, but the best thing you could always do with private lenders is to be as honest and as open as possible. And when you underwrite, you always present to the lenders the worst case scenario and you sell the worst case scenario. So if and when things go well, you come out looking like a rock star.
So basically under promise and over deliver type of
course.
mentality. Basically, take us to what you do now. Like, I know that obviously you talked to me off camera about that you're giving back a lot. Obviously, you're a philanthropist as well too. You mind walking us through that?
I'm glad that you asked about that. We have an organization called the Brooklyn Bank, which focuses on financial literacy, economic equality, and wealth building for people of color. We basically focus on teaching people about entrepreneurship, real estate, stocks, insurance, and all that other stuff. All those things that people in my community are not privy to at home. And at school, so there needs to be a place where people learn about that. So we started in 2017, and we have a lot of programs that we contribute to. So that's my way of giving back.
And then what is your role within the organization?
I'm the founder and the director.
Oh.
We actually have our Thanksgiving drive going on right now. So I'll be sure to send you a link when we're done.
Absolutely, man. I'm happy to always help. One of my mission statements is called Making a Difference, and that's my vision, to just make a difference in people's lives as well too. What made you want to give back? Because I know that a lot of people want to do it, but not as many people actually go about doing it. And then has that helped you in any way?
Of course. I'm blessed. And I was very lucky to recover from what happened in 2008. And the reason why I got hit as hard as I did in 2008 was because I was not properly trained and I did not have the right mindset nor the proper financial education. I've been able to bounce back due to the fact that a lot of people helped me out along the way, and it's only right, and it's only right that I kind of give back. That's the reason why I feel that it's necessary to make sure that I take the responsibility to help any way I can.
What advice would you give somebody who is getting started in real estate investing? And then what advice would you give to somebody maybe who got started into real estate investing, but maybe isn't doing as well as they feel that they could be doing?
The advice I would give somebody who wants to get started is to take the time to educate themselves.
Mm-hmm.
To educate themselves, to learn the systems, learn the neighborhoods, learn the players, learn the programs, learn the different opportunities, the different types. Make sure that you have a very good understanding of a total view of the real estate game, and then decide which part you would like to play in. And the advice that I would give somebody who's already started is to just put the work in. It never gets easier. Whether, from your $100,000 deal to your $100 million deals, you have to keep grinding every day. Never get complacent, never get tired, and never get lazy.
You mind me asking, Jude, what a typical day would look like for you when you just got started investing into real estate to what a typical day looks like for you now?
Well, when I first got started, I was still working. I was working at the phone company at the time. So I was basically going to work, getting on the computer and getting on the phone and trying to do as much of my real estate work as possible while pretending to do the job that I was being paid to do. Things were not as hectic, were not as competitive in New York City then. So there was, I was doing 2, 3, 4 deals at a time at that time. So it was a lot of time on the phone, speaking to contractors, speaking to sellers, trying to negotiate stuff. And today, what my day basically looks like is running the projects that I get up every morning, going through the emails, room site visits, and working with my team on the Brooklyn Bank stuff and working on the programs for that.
Is there anything that you would change in your investing career?
Yeah. If there's anything, what would I change? I would change every time that I lost money. That's what I would change. But unfortunately, you have to lose money to make money, because it's only through those losses that you learn. The reality is since I'm happy of where I am today, I really wouldn't change anything, because I'm a product of all the things that happened gotten me through here. You know, the little butterfly effect, I think they call it, right?
Was there ever a time you wanted to give up?
No, I love my independence way too much. Even when it gets really tough, I always say to myself, well, at least I don't have somebody over my shoulder telling me I'm 10 minutes late for my lunch break or anything like that. And there's nothing wrong with that. It's just something I personally did not want to do for the rest of my life. My independence is very valuable to me, but it comes at a price. It comes at staying up late, worrying about things when other people just go to bed and sleep like babies.
What would you say was the most stressful time in your real estate career? And how did you deal with that?
The most stressful time in my real estate career was, I'd have to say, between 2009 to 2011, when I had about 7 or 8 properties in foreclosure. And I basically had to get out of the real estate business so I could save my real estate business because I didn't have enough cash from the real estate business. So I started doing, I had other ventures in the interim that gave me enough time, that gave me enough float money where I was able to modify and refinance and renegotiate with the banks. And I ended up saving every last property. So
good for you, man. So basically there was a time where you went back to other business ventures in order to basically look at the bigger picture. How difficult was that decision? Because I know for a lot of people, the ego might be like, well, I'm not going to go back and I'm not going to do this or I'm not going to do that. And for a lot of people, it was easier to quit, meaning just let go of the properties. What would you say was your mindset behind that? Because that's admirable that you were able to do that.
My other option was homelessness. I've when all that happened, I've already been out of the workforce for years, and I had no choice. If this didn't work, I had nowhere to go. My back was to the wall. The ships were burned. There was nowhere to go, so it forced me to make it work.
So it was basically sink or swim, basically, for you. Okay.
Exactly.
Is there anything else that you think our viewers would find value in, Jude?
No. I just it was a great conversation with you guys. I want to thank you for having me. Hopefully I provided some value. One of the things that I really want to stress on is the importance of relationships in this business, the importance of education in this business, the importance of giving back. As I said, the reason that the Brooklyn Bank is so important to me is because it seems as ever since I started that venture, I've been blessed with more and more. And so it's super important that people find it in their hearts to give a little something to those that need it.
Absolutely, man. Well, I want to say thank you. This was episode number 85. Thank you so much for being here. For our viewers, if you've enjoyed the episode, we'll include all of Jude's information in the bio. If you send me a link to the event that you guys have going on as well, too, we'll post it on our YouTube as well, too. If somebody wanted to get a hold of you, just so that we have it on the record, what would be the best way for them to do that?
You could hit me on Instagram in the DMs. I'm pretty good about that. Mr. Jude Bernard, or you can hit me at jude@thebrooklynbank.com.
Awesome. Good. So for our viewers, this was episode number 85 of the Morales Group Show. We had Jude Bernard. He's personally transacted in over $100 million worth of real estate transaction. He's been on podcasts like Bigger Pockets and others. So thank you so much, Jude. I really appreciate your time. And thank you so much for sharing.
I appreciate you as well. Thank you.
Likewise, man.